Let me now bring on board Tushar Pradhan, Chief Investment Officer of HSBC Amc. Tushar, morning. Thank you for joining us. Tushar, your house view is that you expect commodity prices to correct this year and equity as an asset class to bounce back. So what's the thinking behind this big macro call?
Well, not much except for logic. I think what we saw last year was a surprising trend in commodities. But this year, I think if we incorporate two things. One is the fact that maybe global demand will soften because we're expecting the Eurozone to be very tepid by growth. We're not expecting much growth elsewhere in the region as well. So by definition, if there is a slower demand for industrial production, for industrial goods in particular, then commodities generally take a breather. Domestically also, we've seen a pretty significant rise in capacity in commodity segments, especially in steel, for example. If you look at India, the users of commodities, the users of these raw materials definitely benefit. And in India, there are a lot of converters. So if you are looking at a dramatic reduction in raw material cost by way of commodity prices going down, then margin should improve. And I think, in effect, equities, which would largely be users of these commodities, should do well. So there is a little bit of logic behind all of this.
So Tushar, going by that prognosis, should we also expect inflation to cool off significantly towards the second half of this calendar year? And thereby, what is it that you're expecting from the Reserve Bank of India in terms of action?
I mean, that also logically would follow that sequence, that initially the Reserve Bank should be very keen to see where the prices go inflation-wise. And they're expecting a tempering of this rate probably by April or May. And if they think that inflation is adequately down and growth continues to struggle, then I think they might do something more dramatic and try to reduce rates to infuse some sort of activity back into the economy. That's a logical conclusion. Though in the past we've made mistakes with this logic, and last year we were expecting inflation to come off towards the end of the last year itself, but it was quite stubborn, and then it maintained for some time. So I think the time correction in any case would have happened. Our expectation also is that inflation should come down, and we should see lower rates towards the middle of this year.
Do you think markets, they always follow logic? For the year gone by, rupee depreciated against the dollar. US treasuries, despite a macro negative outlook, they appreciated. Dollar was the best performing currency for the year gone by. So what potentially could challenge your logical conviction?
There are many things, as we all know, and as you pointed out, markets are not the most logical at most times. I think what could go wrong is that there could be a surprise growth in areas where we don't expect growth to be. For example, I think the US has already started showing some very interesting growth signs. China, where we are expecting most of the growth to kind of just be remaining where it was at the last year's, or maybe even slightly off. Maybe if there is another stimulus which is generated in that country, if that comes back into the market, I think commodities will remain strong. If everybody surprises or everyone is surprised by the European situation and some kind of solution comes, and the risk aversion that we see today across the globe changes, and there is an investment climate which builds up, then all the logic that we have just spoken of may not work. So these are reasons to kind of be a little wary of very sound logical prognosis.
Tushar, what about the index? At 4,800, does it seem like we're standing at fair value and the negatives currently at least are priced in?
Again here, the point is that the market may trade at fair value but not for very long. And it gyrates between euphoric valuations where it trades much higher than fair value, and depressed valuations where it trades at much lower than fair value for longer periods of time. So it's extremely difficult to predict where the market will go. But I think if you take a reasonable price to earnings multiple, you take the average that India has traded for the last 15 years, which is a fairly longish term to take, we have traded between 14 to 15 times 1 year forward earnings. And today we are about a couple of multiples below that 1 year forward earnings multiple. So it is reasonable to expect that we are trading a little below fair value. Of course, this depends on what the earnings estimates are. if we believe earnings estimate to remain reasonably within the long period to again be much in line with historical estimates, then I think we are at a time where it's below fair value today. But where will it quickly go to fair value and above? It's anybody's guess. And I think in India in the past we have seen pretty exciting market times where we pass the fair value into expensive territory very quickly. So at 4,800, if you're saying it's fair value, the minute it crosses 5,500 maybe, we are guilty of being expensive again. So there's a very small margin here. However, by terms of returns, I think that's a very healthy return of between 15 to 16% that one can expect from here. But as soon as it's done, the question comes back to say whether it'll stay there or whether it'll come off from there. So it's difficult to say what's the return, but I think we are fairly placed at this point of time.